Welcome to FidelFolio Investments, where we combine the power of AI and machine learning with human wisdom to manage investments scientifically. In this webinar, we'll delve into the core philosophy behind our approach and explore the intriguing world of using machine learning for investment. Discover how our unique strategies consistently outperform the traditional methods by delivering remarkable results for our portfolio companies. Ready to stay ahead of the curve? Let's get started.
So, Kisle, if you can help us understand what is the core philosophy behind investment management at FidelFolio?
Being familiar with the investment management industry, the way it is run traditionally and today, we know the biggest pitfalls in investment research process. If we have to list the top 3 pitfalls or challenges, they are these 3. Human biases, limited analytical ability, and human errors. Now, if we ask our listeners to identify the most detrimental of these 3, I'm sure most participants would say that it is number 2. Limited analytical ability of humans is the biggest flaw in investment research today. But trust me, by far, human biases is the biggest flaw. Often, we are not aware of the psychological, emotional, and behavioral biases which influences our decisions so much. While we do believe that our decisions are driven by rational thinking, it is quite the opposite. In fact, Nobel laureate Daniel Kahneman has very precisely and in detail told us about this in his book, Thinking Fast and Slow, wherein he talks about biases which are prevalent in our day-to-day life and also very prevalent in investment management. Being a part of this industry, I've been fortunate enough to experience it myself and see it in other investment managers also. However, limited analytical ability and human errors are also very important challenges. So we know that if we are able to overcome these 3 challenges, then we would have a far superior investment management process than what is currently in place. All 3 challenges can be overcome using machine learning with human intelligence for investment research. This is what led to the founding principle of FidelFolio. If we look at the investment framework, the ML algorithm part is captured by these 2 pillars. One is the strategy generator and the other is the strategy analyzer. These 2 components together form the ML part. Basically, they are responsible for creating and backtesting investment strategies in a feedback mechanism to create better and better strategies in a self-learning mode. The third component, the human element, is also extremely important. Obviously, the most important element of human function is to train the ML algorithms, but equally important is to validate the recommendations made by the engine, conduct qualitative analysis, and to ensure that the recommendations are understandable to humans. It is not a black box algorithm. We can actually understand and monitor it and use it in a practical way in the real world. In other words, if we have to describe our system, the strategy generator generates thousands of strategies. The strategy analyzer tests computing statistics and analytical trends. Humans who had trained the engines in the first place run corporate governance, management quality check, validate the recommendations, and finally come up with a portfolio. So if we have to mention 3 terms which describe our framework, they are machine learning with human wisdom, not a black box algorithm, and fundamental buy and hold strategy.
What is this new thing of using machine learning for investing? Like, hasn't AI and ML been in conversation for some time?
Absolutely. True. In fact, according to internet, in 1956 only, John McCarthy coined the term artificial intelligence and had the first AI conference. ML has been in conversation for decades too. But the thing that stepped the pedal over the last few years is the huge data processing capabilities that we have collectively possessed. To put it in context, the amount of data that could be processed 10 years back 10,000 times more data can be processed today in lesser time. This actually led to the burgeoning of application of ML and AI in all fields, including in investment management. That is why AI and ML have created such a huge impact in the way we function today. If we have to visualize the impact of AI ML in investment management compared to all other tools, let's look at this next graph. Now, the impact of AI ML has been more than the impact of computer, calculator, and pen and pencil combined. While the previous tools could do record keeping, simple calculations, and even complex calculations in case of computers, today AI ML can conduct complex analytics, self-learning, idea generation, and pattern recognition in depth that humans cannot. Now, human bandwidth is largely saved for qualitative analysis and decision making only. This is the reason for the huge chatter around AI ML now. This should ideally be seen in the high penetration of AI ML in the investment research process. Let's look at the next chart. Now, the x-axis tells us of the investment holding period from short term to long term. The y-axis tells us whether it is a human-only approach or a machine approach. Let's look at the bottom left quadrant first. Human-only approach for short-term trading using technical analysis. We know that this is almost obsolete now. No major institutional player would indulge in short-term trading using technical analysis using human-only approach. This has been replaced by high-frequency traders, the HFTs, quant hedge funds, and trading algorithms and platforms. Their use of machine learning is very high, and the use of technical analysis for short-term trading is done. Now let's look at the bottom right quadrant. This is the approach with which most of our money gets invested today. This is how traditional investment management is being done. This is a human-only approach. This is the process using which serious money gets invested. These are the money managers we are most familiar with. All the mutual funds, the PMS and AIFs that we are familiar with. In the middle, if we look at the middle, there are a few new mutual funds and PMSs which have kind of built a framework of application of machine learning in investment management, which is not very short term, which is not using only technical analysis, but fundamental analysis also. But none of them have been able to crack the code of not being a black box algorithm and low churn buy and hold product. And being a low churn buy and hold product, none of these have been able to do. This is why we see this huge space, the green circle that lies, where ML and human wisdom have been used in combination to build long-term buy and hold low churn investment product using fundamental analysis. What is also very important is that these are not black box algorithms. These are understandable and validated by humans. This is the space that FidelFolio has explored and built expertise in. We believe that the lower block, where most of the money is today, will shift in the green circle because not only its existence is in question, but we're absolutely certain that this will not exist in less than a decade. If this seems like an overstatement, imagine how many investment firms today could operate without computers. This green circle is the present and future. We are happy to be leading the journey. And the benefits of being in the green circle are immense also. If we go to the next, look at this table. If we compare three major approaches to investment management, number one, ML with human wisdom, number two, human-only approach, and number three, machine-only approach. ML with human wisdom approach is by far the most superior in terms of its ability to conduct extensive research, extensive and in-depth study, ability to identify patterns, understanding driver of returns, eliminating human biases and errors, conducting qualitative analysis, and ensuring that it is not a black box algorithm. These are present only in the ML plus human wisdom approach. That is why we follow this approach today.
Investment in securities market is subject to market risks. Read all the related documents carefully before investing. SEBI registration number. Membership of BASL and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.